Hey guys, welcome back to the channel. In today's video, I'm going to give you a weekend update on the cryptocurrency markets, particularly Bitcoin and Ethereum, and we're going to talk about what I'm expecting in next week's upcoming trading session. After that, a member of our Discord made a really good post about trade psychology in our ByBit World Series of Trading competition channel, and I'd love to highlight and talk about those subjects. Because if you are relatively new in your journey to profitable trading, then trade psychology might seem like something that's bandied about by experts, but it lacks a real definition for you. Newer traders are often going to be focused on the technicals, and if they're smart, on risk management. However, as you become more proficient and experienced in those two aspects of trading, you'll discover that trade psychology really is the glue that underpins the success or failure of any trader. Being aware of it will put you 2 steps ahead of the competition, and it's going to accelerate your growth. I cannot overstate the impact that focusing on my mind and my thoughts as I approach the market has had on my results. At the end of the day, before we do anything, we think about it. So having the ability, having a strategy to combat the negative psychological effects of the market, like FOMO or depression, are vital. But before we begin, please take one moment to support us on YouTube by subscribing to this channel and pressing the thumbs up button for this video. If you turn on notifications, you'll get alerted every time we put out a video or live stream. It helps us more than you realize and allows us to continue mentoring the next generation of profitable traders. Let's get cracking. All right, let's get started with our technical analysis to begin with. Now, structurally, looking at Bitcoin, we can see that it is maintaining its break above a long-term resistance line that dates back from the previous all-time high of 19,000, all the way back here in 2017. We can see that Bitcoin did make a previous unsuccessful attempt to break this high during the summer run-up of 2019 before it rejected, ultimately leading to a bearish trend that culminated in the March meltdown with the appearance of the coronavirus. However, Bitcoin is up nearly 200% from its March lows today, and the momentum of a digital bearer asset that is difficult to counterfeit in a global environment of money printer go burr has finally generated the necessary traction to break through resistance and give Bitcoin a real chance at a new all-time high. Now, while I do not see a price action setup in this current consolidation that I find tradable or that is in my wheelhouse, I will simply note that Bitcoin is bullish, has been trending to the upside, and is currently pushing to break its current level of resistance. While I am a conservative trader by nature, my sentiment and my trades are to the long side, and we should remember the force with which Bitcoin tends to break through resistance. If we successfully trade above this current high, barring a liquidity raid, also known as a sweep, I do see Bitcoin easily moving $1,000 to $2,000 to the upside quite easily. Now, the previous rectangle top consolidation pattern that we identified did successfully break to the upside on this same movement, hitting the identified take profit range, and we currently see Bitcoin pushing up toward its current swing high again as we record this on Saturday, August 15th. If we take a look at a longer term indicator as well, something like the Bitcoin Power Law Corridor, which is freely available on TradingView, we can see that Bitcoin is 475% from its next high and only 40% above its current level of support, meaning in the grand scheme of things, Bitcoin is still at 11,000 in its accumulation zone. If you have not added Bitcoin to your long-term portfolio, it is not too late. Now, if we look at a pathways to profit trading system, this would be a trading structure that we teach in our online trading academy. We are still in an active Bitcoin long position or holding Bitcoin spot long. Several days ago, I pointed out that the exit indicator for this strategy, the IFTRSI, was signaling an exit signal with this green line crossing underneath the red threshold. However, we ended up rallying late intraday, and the signal repainted before the daily close, invalidating such action. Therefore, I am still spot long on Bitcoin and will remain so until my strategy tells me to exit. Our initiator, which generates entry signals, is not generating one on this candle. So the strategy will likely have you scale in or enter if you are out of Bitcoin on an entry signal that will coincide with a breakout of this current range on Bitcoin. Our confirmer, which confirms the trend direction, is still bullish, and volume is also positive. Both of these confirm long trades. Alternative setups in our wheelhouse would be in the event that Bitcoin actually rejects from this range and sells off from the upper $11,000 range, where we would be looking to purchase Bitcoin closer to the $10,500 mark with a reversal baseline bounce, or on a reversal within the trend setup with the use of one of our proprietary indicators like time transformation, which our premium members receive access to with subscription to our premium trading group. And it identifies tops and bottoms of markets. A bottoming signal while above our baseline would signal an entry into Bitcoin at a more optimum price. Now, Bitcoin dominance has formed a new swing low in a bearish trend. I think a pullback in altcoins is likely here, with Bitcoin regaining a bit of dominance before resuming the trend following a brief correction. That means that one can aggressively dump altcoins and wait for pullback entries, or continue to hold through the melee until they again form new highs, as most of them are in the process of doing now. However, just be cautious of entries in high-valued alts, as the position is likely to pull back on you for a while. As for Ethereum, after putting in a second bottom briefly below the $100 mark, ETH has rallied impressively following the March meltdown to form a new weekly swing high, breaking above previous resistance at $300. We are now trading above $400 and entering a level from several years ago when Ethereum formed its all-time high. Resistance is likely in this area. However, the DeFi craze continues to accelerate the demand for Ethereum, and as long as the DeFi gains are being realized, demand for ETH is likely to stay strong. Barring a catastrophe like Uniswap going down, I expect Ethereum will actually break through this level. We have yet to see retail mania in cryptocurrency like back in 2017, so have your market sell buttons ready. I will note that Ethereum's 2.0 testnet went down on Friday, completely borking the experimental new blockchain. However, the issue has been fixed and only affected one client when there are 5, so I recommend those who are interacting with Ethereum 2.0's testnet to practice a fundamental concept of investing: diversify. I'm not talking about your funds, I'm talking about your operating systems and clients. With that, trade safely, trust your trading system and strategy, and make your own independent trading decisions. At the end of the day, your P&L is your responsibility. Now, I want to give a shout out to a member of our premium Discord, Tenacious V. He's been with us for a long time, and in our WSOT channel today, he posted some concepts of trade psychology that traders should remember as we participate in our ByBit competition. If you would like to follow our progress in the ByBit World Series of Trading, you can check our leaderboard out at wsot.crackingcryptocurrency.com. And if you've not yet signed up to trade on ByBit, if you have decided to trade Bitcoin, Ethereum, EOS, or XRP with leverage, I could not recommend a better exchange to begin on. You can register to receive some free trading money in your account as well at bybit.crackingcryptocurrency.com. Now, I want to highlight some of the concepts that Tenacious V talked about and tell you how they've affected me in my trading and my strategy to overcome them. So let's get cracking with number 1, which is loss aversion. Now, Tenacious V says, quote, "We feel losses more greatly than equivalent gains." And no, he did not say equivalent exchange. What he's saying is the negative feelings that we get when we experience a losing trade are greater than the pleasure we receive when experiencing a winning trade, even if the amounts won or lost are the same. We can see this in our own lives outside of trading as well. we tend to be overly critical of ourselves. When we think back on an embarrassing moment, the horror of it is usually magnified in our memory and in our imagination. When we think about how well we did on an exam, we think that we could have done better. When we are considering something in the future that might be unpleasant, like a review from our employer, an argument with our spouse that we need to have, our own death, often the unpleasantness magnifies into something approaching terror. The best explanation is evolution. As humans evolved to attempt to avoid death, their strategies evolved with us, hard-coded into our brains. As unpleasant as it may be in the moment, if you hear a rustling in the night, you are likely to become afraid or worried, at the least. That's because at the back of your brain, you know that it could be something that wants to eat you. Your fear makes you more likely to take precaution to avoid being eaten, just in case it is a predator. If there's nothing out there but a bunny, well, you're afraid, but you're still alive. However, if there was something out there with bigger teeth than you have a better chance of being alive because your fear motivated you to do something. Now, while this may seem abstract, it implies that at the ground level of our brain's wiring, we have a predisposition to negative thinking and fear when faced with unpleasant or dangerous situations. If those unpleasant feelings were removed, we would likely be lethargic and not take any action when we hear that rustling in the night, which in the cases that it's just a bunny, well, that's fine. But the one time it's a predator, well, your genes aren't going anywhere but into a stomach. Other theories suggest that we evolved a negativity bias to avoid social stigma or being cast out by our tribe. But in any case, if you're going to be a human, you're going to have to contend with having a natural negativity bias. So what's a good strategy to contend with this negativity bias? Well, being aware is the first step. Now you are. But following that, keeping a good trading journal helps enormously. Being able to look back and objectively see the results of your trading over months or years and seeing what your average numbers are helps you remember that you are a winning trader and that this current loss is not as significant as it seems to be, as it may be magnified in your mind. Practicing proper position sizing will actually physically prevent you from incurring a loss that is. So make sure that you're pulling out the calculator for every single trade, no exceptions. Finally, remember that your success is not measured by any one individual trade, but a series of trades over time. Focus on the big picture, not the individual occurrence, and you'll be prepared to deal with negativity bias. Number 2, endowment bias. Now, Tenacious V says, quote, "We value things more greatly once we have them," end quote. Now, I agree with this. If your friend offers to sell you his 92 Honda, you might offer him a few $100s. But if that is your 92 Honda, you want at least $1,000 for it. I just put a new muffler on it yesterday. The way I see this affecting trade psychology is in its relationship to holding bags. Many who have been around since 2018 will know this feeling. Now, while it's easy to listen to someone tell you how they bought XRP at $2 and held it down to 30 cents and say, well, of course you shouldn't have done that, it's often much harder to apply the same objectivity to our own bags. How many watching this video held an altcoin from its relative highs in 2018 all the way to current day? I'm a professional trader, and I know I did. I'm looking at you, Funfair. Come on, Fun. You're supposed to be the basis for all online gambling by now. You're not even announcing partnerships anymore. I feel like your heart isn't even in it anymore. Once you actually hold a coin, you tend to feel that it's more valuable simply because you hold it. And because your mind is thinking fairly, you want as close to or above a break-even price for selling it as you acquired it. Makes sense, but knowing when to cut a loser early will save your life in the markets. I recommend you take a moment to realize your role in the big scheme of things. That coin or that stock was developed without you, was bought by many people besides you, and the fungible product that you hold in your hand or in your ledger is not more valuable because it's in your wallet. It's the same thing that's in someone else's wallet. Think about the impact to your overall finances and act accordingly. Which brings us to number 3, ambiguity effect. Tenacious V says, quote, "We are happier with the devil we know," end quote. Now, truer words have rarely been spoken. We will often find ourselves remaining in unpleasant or unproductive situations merely because they are familiar to us. Bad relationships, unfulfilling jobs, unsatisfying friendships, these are all common areas of our life that we're familiar with. But what about trading? Well, the 2 main places I see this affecting us is with our overall trading strategy and once again, holding bags. As a trading mentor, often it can be difficult to get students to open up about their losses and what exactly they don't like about their trading. We tend to associate our actions with our identity. So when someone is a losing trader, that translates into, "I'm a loser." And we often don't talk about what truly ashames us. We bury it and we keep it hidden. In reality, your actions are not your identity because your actions you can change through will, and your identity changes slowly over time based on your experiences, which in part are shaped by your actions. That means that you can change who you are. Hooray! 10 years of psychotherapy avoided with you watching one YouTube video. Make sure to hit the like button. Now, it's easy to be comfortable with what you're doing, even if what you're doing in the market is not giving you the results that you want. And it can be difficult to be honest about that. So first off, realize that your trades, the good and the bad, have nothing to do with you as a person. They are all a result of what strategy you are applying to the financial markets. You can change your strategy, and therefore you can change the results of your trading. You, the person you, are just along for the ride. Disassociate your ego and your actions, and you'll be well prepared for success. Secondly, and shortly, in relation to holding bags, we can often get attached to our investments. Again, as stated earlier, this is part and parcel endowment bias. For some reason, the Litecoin in my wallet is special because it's in my wallet. And it's not. It's just Litecoin. And it might be time to let it go. Now, fourthly, and finally, the illusion of control. Quote, "We can save this one. I know I can. Just need one more shot." End quote. This usually translates to hold my beer. How many times has a trade plunked down below the level where you said you'd sell and you thought to yourself, it's just a retracement? Well, how did that decision pan out? Statistically, over a wide series of trades, not very well. Remember that the fundamental nature of the market is unpredictability. And while there are a few well-positioned whales out there who can move markets, one, it's not as easy as you think in their high-vaulted castles of stacking, and two, that's not you. No matter how hard or how long you stare at the chart, you're not going to affect the outcome. The market is going to do what it does, and you are just along for the ride. The amount of mental effort you put into it only affects one thing, your mental well-being. It does not affect the market. You do not control the outcome of your trade. And that's difficult to accept, especially for men. We like to feel in control and confident about what we're doing. So when our financial success is tied to something that is inherently random, we can often feel powerless and vulnerable. Again, disassociate your ego from your trading. Remember, we can consistently extract profit from any market as long as we have an edge. It all depends on your strategy. Does your strategy have an edge, historically and currently? Do you make more money than you lose? Then the market can be random, but the results of your strategy are not. Shape your confidence and base your ego on your ability to test and craft strategies, because that is something that is within your control. Hit the charts, back test, forward test, and apply a good strategy to the markets consistently, and you'll feel powerful about being powerless. Well, that's it for today's video, guys. Thank you so much for watching this far. If you haven't already, make sure to subscribe and like today's video and share it with those who you think need to see it. These are real issues that affect all of us, and being able to identify them and develop a strategy to overcome them is important to sustainable trading. If you'd like to learn these concepts and much more, as well as build your own objective and winning strategy like the ones our top traders use, join our premium trading group at premium.crackingcryptocurrency.com for education, indicators, strategies, signals, and much more. And keep up to date in our Discord channel, the link which is in the description below. Question of the day in the comments section. Let me know how these aspects of trade psychology have affected you and what has been your strategy to overcome them. Until next time, trade safely.